Hello, I'm Doug Warren, and welcome to a brief presentation designed to show you how to use the Social Security Navigator Report Generator program. The attractive reports that you can quickly create using this program can be offered to seminar attendees or individual prospective clients who want to learn more about Social Security. Today, many advisors are finding great success attracting people to seminars and workshops devoted to Social Security. The challenge that is often faced is in finding a compelling reason why these seminar attendees should meet with you individually. Offering a free Social Security Navigator report can be a great way to bridge this gap. If done properly, reviewing the pages in this report with prospective clients will motivate them to want to work with you to do a more comprehensive analysis of their Social Security benefits, as well as developing a retirement income strategy. I'll show you how to accomplish this as we go through this video tutorial. To prepare a report, launch the program and click the Input link in the bottom left corner. This will take you to the screen where you can enter data specific to your client. Enter your name here, the way you want it to appear at the bottom of each page of the report. Next, enter the client names. Note the client names will automatically appear at the top of each page. Then enter the retirement age and other data relative to your client. You will also have to enter the client's primary insurance amount, or PIA. This is the benefit that they expect to receive from Social Security at their full retirement age. If your client does not know this amount, they can go to the Social Security website to find it. That's all you need to do to generate a report. I strongly encourage you to personally review each report with your prospective clients. These reports provide you with a powerful way to quickly illustrate why prospective clients need your assistance as they plan their future retirement. You advance through the pages in the report by clicking the page numbers at the bottom of the screen. Page 1 allows you to briefly discuss the differences in benefit amounts if they're started early, at full retirement age, or delayed. Note that you can change ages and the estimated benefit amounts will automatically update. I would suggest that you make it clear to clients that neither you nor the report is recommending the optimal start age for benefits. Instead, you're merely providing them examples of how benefit amounts are impacted by the client's decision as to the age they claim their benefits. Again, the purpose of this program and the reports it generates is to help you encourage clients to engage in planning. Tell prospective clients that you're not in a position to make specific recommendations because at this point in time, you don't know enough about them. You might spend a minute describing how you do help your clients and the information you would need in order to help the people that you're reviewing the report with. When you're ready, click here to move on to page 2. Page 2 is devoted to Social Security retirement survivor benefits. You can illustrate how the decision to start a reduced benefit early, the tan boxes, could have a negative impact on the amount of the surviving spouse's widow's benefit in the future. The green boxes show that delaying the start age of Social Security can provide a much larger widow's benefit. This page provides the advisor with a great opportunity to ask prospective clients if they've done planning to help secure the future of the surviving spouse. Because many people have not, the advisor is given the great opportunity to talk briefly about the comprehensive planning that he or she does to help protect the clients and the surviving spouses. Page 4 allows for a general discussion of how factors like life expectancy and future income and expenses are important additional considerations of proper retirement planning. In reference to the bottom part of this page, it might be beneficial to ask the prospective client if they or their current advisor has done any work to project future expenses and future income to see if there are any gaps between the two. Because many people have never done or seen any projections of this nature, this provides another great opportunity to explain the comprehensive nature of the planning work that you do for your clients. Page 5 through 8 are devoted to the extremely important topic of the taxation of Social Security retirement benefits. This can be a very important consideration because this tax, referred to as the tax torpedo, can have an alarmingly negative impact on future net spendable retirement income for many retirees. Page 5 allows you to illustrate the potential impact of this tax by showing what happens when $1 is withdrawn from an IRA when that dollar exceeds the top threshold used to calculate the taxable portion of Social Security. Note that you can change the marginal tax rate you want to use in your illustration. It is important to make sure that your prospective client understands that you are not a CPA or tax professional and that you're only attempting to provide a general explanation. You should direct your clients to their tax professional for specific information about if and how this tax might impact them. Page 6 allows you to provide a brief explanation as to the thresholds used to determine the taxable portion of Social Security. Of particular significance, and a point often missed by many people, is that only 50% of the Social Security benefits are used in these calculations. This can mean that if a greater portion of a person's overall income is made up of Social Security benefits, the taxable portion of those benefits might be reduced, depending upon the specific circumstances. Advancing to page 7 can help you demonstrate this important point. This page provides 2 examples. Each assumes the same total income, which if you like, you can change here. Just enter the income amount you wish to use and hit your tab key. The blue example on the right shows the impact of having a greater portion of the overall total income coming from Social Security. For example, if the Social Security benefit was $12,000 more for a total benefit of $36,000, then the taxable portion of that larger amount would actually reduce when compared to the tan example on the left. Again, the reason for this is due to the fact that only 50% of Social Security benefits are used in the calculations to determine the portion that is taxable income. This might be another important consideration favoring delaying the start of Social Security benefits. Often people who do delay the start of benefits will have a larger portion of their overall income coming from Social Security due to the delayed retirement credits that boost the amount of those benefits. By changing the amount in the yellow box, you can illustrate the impact using different assumptions as to the benefits used in the calculations for the blue example on the right. Keep in mind that the maximum portion of taxable Social Security is limited to 85%. In this section, you will see the actual formula used to calculate the taxable portion of Social Security benefits. Depending on the amount of income you use in your assumptions, this maximum could be met. If so, you'll see it indicated here. With page 8, you're illustrating an entirely different point. The green section on the right shows an example where not only the Social Security benefit is greater, but also the impact of having a portion of the income from a traditional IRA or 401k reduced and replaced with income from some tax-advantaged source. By tax-advantaged, we are referring to a source of income that is not only potentially income tax-free, but perhaps as important, income from a source that does not go into the calculations for determining the taxable portion of the Social Security benefit. Examples of income sources that potentially fit this description are the proceeds of a reverse mortgage, qualified distributions from a Roth IRA, and cash value withdrawals and loans from permanent life insurance. By increasing Social Security, reducing distributions from traditional tax-deferred retirement plans, and supplementing that income with a tax-advantaged source, it may be possible for a person to experience a significant reduction in total taxable income. Again, it's important that your prospective client understands that you're only providing broad examples and not specific recommendations, and to always direct your clients to their tax professional for advice regarding their specific circumstances and before implementing any strategy or recommendation that you might ultimately make. Before leaving page 8, note that by clicking here, you can change the example on the left to the first example from the prior page. This allows you to illustrate the dramatic difference in potential taxation when little advanced planning is done. Page 9 allows you to discuss and review other important planning considerations. And page 10 provides disclosures and other important information about what is being shown in the report the client should understand. You can print the pages of this report by clicking the print text that appears in the lower right corner of the screens. Please note that it is a limitation of this program that each page must be printed individually. During your review of these reports, you have given your prospective clients many important things to consider when it comes to planning for a secure retirement. Now it's time for you to see if those prospective clients have an interest in engaging with you in your planning process. You might want to show examples of the comprehensive plans or benefit analysis that you've done for your other clients. Follow this process correctly, and I'm confident that you'll find that the Social Security Navigator will be a valuable tool in helping you to grow your practice. Thanks for your attention.